feedback from customers, knowing you've created something of real value, it's like you get hooked or addicted to it. And that's the best feeling that I felt. And I was like, okay, I need to experience that for the rest of my life, and I need to experience that at the broadest scale possible.
Welcome back to another episode of In Check with FinTech. On this episode, we're joined by Max Linden, founder and CEO at Lemon.markets. At just 19 years old, Max founded Lemon.markets in 2020 with a bold vision of making capital markets truly accessible. Since then, the FinTech has grown to a team of over 60, raising a total of 28 million euros in funding. In early 2024, Lemon.markets obtained BaFin licenses as an investment firm and launched with its first partners. As a passionate entrepreneur and brokerage enthusiast, Max sees his role as CEO as that of a chief enablement officer, empowering both the Lemon.markets team and its partners. A big thank you to ACB Stories for hosting us at their podcast studio in Berlin and making this recording possible. Enjoy listening.
Do you take care of kind of the commercial client-facing side as well as more the technical side, or what does your role as a CEO entail these days?
Yeah, I think what I'm trying to do is play to my strength, and that means finding great people who are better than I am in the different crafts that we need to excel in this business that we're building. And then I try to kind of what I can do best, which is represent us and find the right opportunities that we should pursue. And therefore, I need to speak with clients, right? I need to understand where the market is moving. And I think you can do that best by being there, observing and learning and talking to people directly. So I'm heading the commercial side these days mostly. And then, we have a broad leadership team that covers the rest.
Has that always been like that? I mean, going back to, I think you started in June 2000 or July 2020, right? Is when the company, at least on LinkedIn, I saw you guys started.
You did some diligent research, yes.
Well, yeah, I really looked at your LinkedIn profile. Yeah. Is that when the company was officially started, or was it already started before that?
I mean, starting a company where there's different dates. You can look at the incorporation date. That was a bit later. That was in October in 2020. And then you can think about like when do we start working on the project that today is Lemon.markets, and that we really started at the end of 2019. And there was a very distinct moment. I knew that I wanted to work on something entrepreneurial and wanted to do something big, and I just came out of a 3 months internship here in Berlin actually, and I went back to Münster, which is the city where I studied. And kind of in between that travel, like we did a pit stop in Hamburg. Where we did a so-called startup tour together with our student club, the venture club, that I owe a lot to. And, we organized basically kind of meeting entrepreneurs. And one of them was Tarek Müller, the founder of About You. And we had a session with him in the About You office. And for 40 minutes, 45 minutes, we just asked lots of questions. And after some time, I think he just got so fed up by my questions. He was like, yeah, I mean, you can ask everything and anything, but you can also just start. And that was kind of the takeaway. And we're like, okay, then let's go do something.
Mm-hmm.
And that was kind of the turning point. And from there, kind of everything kind of developed into what Lemon.markets is today.
Maybe going back to that idea origination, how did the idea come about to start a company such as Lemon.markets?
I mean, I think it's not so much about the idea, right? The way how then it's a process. I think the key thing for us to get started was the insight and the frustration that we felt when we looked at the investing landscape in Europe. And for me personally, right, how did I end up there? When I turned 18, I wanted to do kind of the most entrepreneurial thing with the small fortune that I've worked for beforehand as we're building a small web agency. To me as an 18-year-old, the smartest thing to see, hey, I don't need that money at the moment. Like, let's put it to work for me. And I have 10, 20 years time. So, the stock market is a good place to start. And I opened a brokerage account on my 18th birthday. And I wanted to buy shares. And I wanted to buy shares in the worth of 500 euros. But it didn't work. I could only buy units of shares. I didn't understand that back then. So I settled on some units and then I wanted to buy them. And I had to pay 10 euros in commission. 10 euros. Back then I worked for 10 euros, half an hour. And I was like, that's outrageous. Either they're like insanely profitable or, it's insanely manual. Turns out it's a bit of both. But that was kind of the starting insight because I personally feel that everyone needs to be invested in capital markets because that's the best way to take care of your future. It offers such diverse opportunities from technology to kind of being really conservative with money market fund. It's such a broad universe, and not participating in that they're not participating in the productivity that companies have, and the gains that they're creating, is missing out. And so for me, this feels very natural and very kind of obvious. If you look at the data, right, it's not. I mean, you come from the Netherlands. There, you have a stronger kind of equity culture. I think it's like 25%, 30% kind of ownership of stocks in the population. In Germany, it's like 12 million people, which is not really that much. It's like 15%-ish. We were on an upwards trend. Now it's stagnating a bit. But that means 85% of people haven't invested in any form of capital markets, neither funds, ETF, stocks. And that's a lot. And if you look at data from the US, for example, where you have 50% plus of people participating and taking care of their pension that way, it seems to be a huge gap. And when you look at the way how government pension systems work in Europe, they don't work anymore. Not with the challenges that we are facing when it comes to the growing age of our population and the shrinking size of our workforce. And so capital markets and doing something yourself is the way to go. And if that's the case, then it needs to be obvious and ubiquitous. And you need to find it easily accessible and easily affordable. And that's the big mission and vision that we have to propel that forward. And I'm grateful that we are in an industry with other trailblazers in doing it together.
You're doing that obviously through offering technology, right? So you had a kind of challenge you run into as a consumer of not being able to invest your money or make it start working for you easily. If you look at countries such as the US, where you said over 50% is putting their pension into stocks or capital markets, is the difference there technology, or is there also other things that make it that there's bigger adoption of that kind of access to capital markets, you think?
I think that's a tough question to answer. I think there's very obvious things which are different. Culture.
Yeah.
And this starts when you look at important characters in politics or society on what they are promoting. When you look at the insurance industry and what they are promoting, right? There's culturally, I think I can only speak for Germany and the part of Germany that I gotten to know, but I'd say that there's a much higher desire for security and certainty. And of course, right, capital markets are volatile in the short run. And so there's a cultural kind of difference. I think that's one of the biggest points that need to be overcome because people need to understand what's happening. And I think lots of people don't understand that because, I mean, everyone talks about Wall Street and right when you watch a movie, like that's, common term. Not many people have heard of, London Stock Exchange, the Frankfurt Stock Exchange or other exchanges. And so I think that's the first point, really cultural. And then the second point is indeed kind of the accessibility, right? I mean, when you go 5 to 10 years back when we started, it was expensive. It was hardly accessible. Now that's changing gratefully, right? I mean, similar to what you've seen in the US where Robinhood pioneered this kind of zero commission investing. You're now seeing that in Europe as well with extremely successful players like Trade Republic and Scalable kind of leading the path. But then, that's only taking it so far, right? I mean, you need to really bring it, to the masses. And that means it's not just a front-end problem, it's really a back-end problem where that needs to be fixed. And then you want to make sure that every, point of sale, every app these days or, a company that you engage on your finances with, that they have the opportunity to allow you to invest in capital markets. And therefore, it needs to be easy to integrate, attractive commercial opportunity, and someone needs to be there that takes care of all the, regulatory burden that come along with that. And so that's really how we are looking at the market broadly.
Yeah, exactly. Yeah, I think that's kind of you want to minimize the friction that you have as a consumer in case you do want to invest, right, and make the money work for you. Maybe actually thinking about that, maybe again coming back to culture, what it feeds into is that maybe the Americans are more used to having friction than maybe the Germans or Europeans are when it comes to investing specifically. Like you talk about the culture and what I think feeds into that as well is maybe if we talk about pensions specifically, the way that your pension is being taken care of in the US, I think you're very much, okay, well, you take care of it yourself. And here in Germany and as well as many other countries in Europe, it's like the government takes care of your pension. So maybe that's also a difference that feeds into it.
Absolutely. And I think that, it's something deeply cultural, right? And it's great that we have a system where we have high trust in our state. I think that shouldn't change. I think that's a good thing to have. But then, the question is, what's the job of the state, and what they can excel in, and what you should, excel in privately. And I think when you look in the US, right, in the end, it's a co-production of every individual and the government and the policies, right? I mean, the most popular investment product is the so-called 401k, which is kind of an employer-driven pension scheme, where everyone is contributing, and then you get a tax incentive. And so basically, it's a no-brainer thing to do that. And by creating this very long-term incentive, because especially the tax incentives, and this, compound effect only come after a long time, you make sure that people don't use that or misuse it for some short-term, gains or trading, right? And so if you think about that and create a system with the right incentives, that's something hugely beneficial. And, we had some initiatives throughout Europe and also in Germany, and none of them yet had come true in Germany. But if you look at France, they have the same kind of opportunity. A product called PA. I don't speak French, so I will not try to pronounce the proper term. But basically, it's also a tax wrapper, which is designed effectively. And I think that's what the state can do to kind of really kind of help people think through a smart incentive system, where the goal of the state, people having pension, and having some savings when they retire, and the opportunities that are out there, like capital markets, can be combined to a force of good.
Yeah, exactly. Interesting. I mean, all these factors obviously made it for you to have an opportunity to create a Lemon Markets. Maybe going back to that time when you started the business, you were back then 22?
So I'm born 2000, which means you can always easily calculate kind of how old I was. And so, yes, that's how I got started.
All right. Okay. I mean, when someone is 20 years old, I remember when I was 20 years old, I was definitely not thinking about starting a company. Is that because you were raised in a way that was always entrepreneurial? Were your parents entrepreneurs, or how did you come up with, okay, let's just start a business?
Yeah. I mean, I love my parents and I'm very grateful to them, but I think it's fair to say that, they're the opposite of entrepreneurial. My dad works for the state, and my mom kind of for the church, right? So I think they also have a very high degree of, security that they were seeking. And so I was fortunate to kind of grow up, and money was never really a topic, neither a topic of interest nor, a topic that we had to struggle with, which is something really privileged. And so, the way how it caught me is, I think, really the bug of entrepreneurship. And how that happened is, after A levels, I was sitting around in this kind of downtime between, I was starting to study. And a friend kind of came by and said, "Hey, Max, you want to earn $300? $300, that's a lot of money. What do I need to do?" It's like, yeah, easy. You just need to build a website and the internet. I was like, okay, I'm sitting in front of the computer anyway. So yeah, what do we need to do? And that's kind of how I got into this whole world of building things. And we started, this idea of a web agency. And I still remember, like 6 months in, one of our first customers called me back and was like, "Hey, with the new website, we've increased our sales and we sold more than I planned. From the extra profits, I can take my family on vacation." And that was such a great feeling. And I mean, you're an entrepreneur yourself, getting that positive, feedback from customers, knowing you've created something of real value. It's like you get hooked or addicted to it. And that's the best feeling that I felt. And I was like, okay, I need to experience that for the rest of my life. And I need to experience that at the broadest scale possible. Because you can really see that. And back then, there's nothing that I learned before. And I just did things. And you can be a force for good in the world by contributing to that. And entrepreneurship is kind of in the way how our society is structured, the vehicle to drive that change. And so that's how it all caught me. And that kind of was then leading up into figuring out, okay, an agency is a great business model, right? Because you sell time and you get money. But is it the ultimate business model that allows me to kind of really build that big vision that I'm having in my head? And I figured for me, that wasn't the case. And so then kind of that started the search to what in the end became Lemon.markets.
So you wanted something more scalable?
Scalable. It was the first thing. The second thing was in an extremely big market. And then something that I'm extremely passionate about. And so these are the three things kind of that were most important for me. And so I started by doing things with what I'm passionate about. The first thing on my list was in capital markets, investing. And I didn't get far on that list apparently.
You started that with two other co-founders, is that right?
So I started it together with a co-founder, and then we had a third person coming in really early. And that was kind of the initial setup. And then we just kind of got to work. And since then, there's been so many people that helped me on that journey. And I think that's, one of the true blessings and also learnings of the startup ecosystem. People are just willing to help out. People are willing to kind of take 30 minutes. And breaking into that industry was so hard. But it was possible because people opened doors for us. I didn't understand in big days because basically what incentive did they have, right? There wasn't anything that we could offer them but our genuine interest. And luckily, right, people like to hear themselves talk and be important, and I think that's a good thing. But also there's lots of people out there that just are willing to pay it forward because someone did that for them, and that's been to me one of the big learnings and one of the things that I'm trying to preach myself these days.
How were those first kind of days, months, years? Well, I mean years. It's only 5 years ago since you started. Not even 5 years ago you started the business. So let's focus on the first couple of weeks and months. Was it difficult? Was it easy? How do you look back on it now if you break it down? Like, I'm sure that maybe now you've romanticized it in your head and it was an amazing time, but how do you look back at it?
I think, the big advantage that we have is there was no preconceived notion in our head, neither of how business works, nor of how the industry works. And we used that to our advantage in challenging everything and anything, and being very opinionated about the vision that we have for the future. That makes you kind of rethink certain processes, some for better, especially ones that generate upside. And so that's something which this idealism to a certain degree is kind of what carried us throughout those first months. But of course, it was tough. And there was many things where it just required hard work. And that's something which one of our mentors very early said to me is like hard work and good people, and that's been one of the simple formulas that I've been trying to keep in my head and that we're focused on. And so in these first months, right, it was the same as for everyone. How do you find customers? How do you show it with these customers that they actually like what you do? How do you iterate on what you have to kind of make it as good as you can? When you build infrastructure as complex as we do, it's a bit of a cold start problem, because you cannot just say, let's test it out and with some real money. Like, that's not the way it works, right? It's a regulated business, and so there needs to be lots of structures in place. And so we really kind of went step by step and trying to figure out, okay, what's the leanest way to prove as many data points or create as many data points as possible to prove the hypothesis that we have, which is there needs to be good infrastructure for developers and companies that want to build product at the stock market, or with the stock market, and that's kind of what got us started, and where we once again we're fortunate to kind of tap into a community of people that were looking for something like that.
Any big learns you had about yourself? Maybe things you look back on?
Big learnings. There's so many, right? It's been, I think, plenty on this journey. I think the key insight in the first month and years really was, okay, if you believe in yourself and you can make it, or you have that, then you can make literally anything happen. That was something where we stumbled into a lot of things, and then kind of when we look back after a year, we're like, okay, wow, that worked quite well. And I think that's also then fueling you with that confidence that you need to propel forward, because entrepreneurship is literally getting slapped in your face at least once a week, maybe not once a day, and so having that stamina to kind of power through. But seeing then also after such a short time that there was very positive validation for us in the form of customer feedback, in the form of funding, was something that really kind of helped me kind of find my footing.
Yeah, I definitely recognize, I think that believing in yourself is a great description. The process to believing in yourself is an interesting one as well, though. I think indeed, like you said, you get smacked in the face, or you get rejections from clients to say they don't want to work with you on this product right now, or it's not interesting to them, or you spend so much time into building something for them or trying to understand what they're looking for, and then they say no. So you see the finish line, and then the person gets pulled out last minute. So I think you need to overcome a lot in order to start believing in yourself. I mean, that's what I remember looking back at kind of those first days. It was a lot of rejection, and especially in recruitment. I mean, there's so many parties involved, and the candidates and the clients. And if the candidate says yes and the candidate and the client says no, then there's no deal. They might both say yes, but then further down the line, last minute, one of them might say, "Well, actually, we changed our mind. Budgets have changed, etc." So I think it's those kind of setbacks that you need to get through in order to get to that phase of, okay, I can do this because you've seen and you've proven the success, right?
You're saying it right, and recruiting is so much more rejection. How are you dealing with it? Like, what was your kind of mindset going into these conversations? Did you expect 90% to drop out, or like did you want 100% to kind of work out? What was your process going in?
No, the way that I look at this, every no is a step closer to a yes. That's what you're working towards, right? You know that you're going to get no's. You know that you're going to get rejection. But you also know that eventually there will be a yes. I mean, in recruitment and in broader sales, it's both, I think, a quantity as well as a quality game. I mean, if the quality is not there, then the quantity doesn't really matter. But quantity is definitely important in order for you to get to that yes. So for me, I've always saw rejection as, okay, this is one step closer to a positive outcome.
Makes sense.
Is that something, how you look at it as well, or how do you tend to do? I'm sure you get rejections now, right? Even though Lemon.markets is doing well, you got a lot of investment. I'm sure there's still clients who say, look, Max, great product, but not right now. Is it for you, okay, we're moving on, or do you try to draw conclusions from it and improve further, or how do you deal with those?
I think every interaction is a learning opportunity, right? And I'd say, there was an extremely bitter rejection mid of last year. And that got me really devastated because there was something that I was working on for a long time. And they gave very clear feedback, which I appreciate to that date. And I took that feedback and we implemented it right away. It took like 3 to 4 months for it, to work out. But I'd say that was one of the things that we changed for good. And the feedback initially was just so eye-opening because I haven't thought about that point earlier. And so kind of for me, it seems to be just kind of continuously expanding my horizon and learning more perspectives, and thereby being able to kind of better understand the world, and then better figuring out what's the tactic that we should deploy here. And so it's an ongoing process, and so that's what we try to do. If we lose out on an opportunity, if we lose out on hire, if we get declined, or like we cannot do things the way we want, like afterwards we sit down and we're like, okay, what went wrong in that process? What could we have changed? In hindsight, what would you do different? And then how can we apply it as fast as possible to see that actually would have been the right thing? And so that's something where, classic in the deal review, right? There's, different formats to do that. And I think it's just, a really important part of building.
I think that's the exciting thing about building, right? Just looking, again, maybe going back to what do you take from a no? I think that's where the learns are. Like a yes or a happy customer, as important as they are, it is oftentimes much harder to draw conclusions from that will help you to get better. It's often the ones that do reject you that you can find out, okay, what can we do better next time? You can actually make big jumps, I find.
Absolutely. I think it goes both ways, right? I think you also need to look at it and be, and that's at least something from a leadership perspective that I try to do, be clear and positively reinforce, right? Because if something is going well, then rolling that out across the board is also something beneficial, and I think that also helps people to kind of have their stance and have that confidence, and so I think you need to hold them, both, and you cannot just go on the things that went bad and be like, oh yeah, we need more of that. Like that's what we want. I think ultimately you would want things to work out in your favor more at least than half of the times, and so I think it's about finding that good balance. But especially when you feel like, okay, there was something that was really important, I think then it's really worth time to sit down 1 or 2 hours to really look at it from different perspectives and not just have your own. And then also, I think that's the most important, be extremely kind to the other party, and be extremely grateful and show your appreciation for A, the time, and B, the feedback. Because look, I mean, what we are building is infinite. And so I think then reacting snappy or reacting emotional is very understandable. And I feel those very same emotions because rejection sucks. No one likes to be rejected. It goes in either ways, right? I mean, I think the more common example is probably gracefully, letting down candidates. And the way how we try to do this, for example, is we always give feedback. We tell you what we learned about you in the process, that we want to feedback you that can help you to get better. And yes, the process didn't reach the outcome that we both wanted, but that's the minimum that we can do to kind of show the appreciation for our time. And so I think that's something really, really valuable. And it really shows how you handle yourself. There's always a second opportunity. And you always meet someone for a second time. And I think especially these moments are the ones that, form up how you meet each other when that time comes around.
Be part of MPE 2025, where the future of merchant payments begins. Build your future at Europe's largest merchant payments event and expect a 3-day conference focused on every angle of merchant payments, from acquiring and open banking to embedded finance and the world of AI and payments. MPE 2025 is your gateway to new opportunities and business success where you learn, network, and showcase your solutions. Get your pass now to be part of the must-attend Merchant Payments Conference of 2025.
So you expect transparency from both sides, basically. The way that you give transparency towards, in your example, the candidates, basically, that's how you like to get transparency from your clients or prospects who do reject you.
We would appreciate that always. And I think, it starts with the way how you're carrying yourself. And that's then also what you can expect from the others.
It's so hard, though, to stay nice, especially if you're being received bad feedback, right? As much as I am always about, okay, give me feedback and give me real feedback and honest feedback. Like you said, we are emotional beings, and sometimes at least I, take it personal. And then to stay nice, I think that's the hardest thing. One of the hardest things to do, I find.
Absolutely. And I mean, especially when you're, and taking it personal is a good sign because it means that you're kind of invested in something. But then on the other side, right, I think you've got to realize that someone on the other side is there with good intentions, and they're giving you that feedback, and they have thought about it, and they probably think it helps you. And you need to, see and find if there's something that helps. And I think that's your job then. And I think there's so much worse you can, I think energy can only be kind of directed, and I think you can direct the energy in the way that you want. And so even if it's bad feedback, there's some energy behind that feedback, and so I think that should be directed to be a force of good. And so that's how I try to take it up. But I'm not perfect. Of course, I then sometimes snap down the laptop and I'm just really pissed. And that happens too. And I think that is normal, and you should give it room to then get back and be focused, because 2 minutes later the next Zoom meeting starts. You need to smile. You need to give full energy, and I think that's something which one needs to be aware of.
There's this book, Radical Transparency, which I think is based on the culture that Netflix has around giving feedback. Is that kind of how you also internally try to give feedback to each other? Is it radically transparent, trying to help each other improve all the time, or is it not necessarily a conscious part of your kind of organizational culture?
Read that book as well, and came to like it. I think it's been a while, so I wouldn't kind of dare to quote it. But yes, I mean the term that they use, right, is candor, and being really candid, and that's something that we aspire. Are we perfect, and are we there? And is that what everyone would tell you? Probably not. Is it what I aspire as a leader and what I'm trying to kind of achieve? Yes, absolutely. Because I think ultimately, right, if it comes from a good place, that's what helps. Because only if you have all the data, then you can make a good judgment call. And sometimes you can present people with all the data that you have, and you and the person can come to a different conclusion, and that's fine. And I think then but if you from like day one establish that being open and being kind of able to talk about it in this way is part of how you want to build culture, then I think it helps people to also take things less personal and be more focused on kind of the objective and that you're trying to reach. I have found always makes these kind of discussions easier, however complicated or difficult they get. And so I think it's worth trying and it's worth aspiring. It will not always work out.
No, I agree. Indeed, it's easier said than done, as you said, especially because feelings come into play. That just makes it way harder, obviously. So you have this idea. You have one co-founder, one person who joins pretty quickly after. Then you have to build an organization, right? So you went with, let's say, 3 people at the start to now how many Lemoneers are there?
60.
60. How did you do that? Did you read a lot of books? Did you hire someone, get someone in to advise you? Did your coach help you? How do you build a company from 0 or from 3 to 60 in 5 years?
I think it was all of it that you mentioned. I think mostly I would call it learning by doing, and you can do a lot of things gratefully. Having the right people around you for starters, then being able to tap into the right resource. I'm a huge podcast fan. So yeah, I read, but I listen even more to podcasts. And by now there's so much great knowledge out there that you can just consume freely. One of my favorite series, for example, is Blitzscaling. It's like a YouTube series from like, I think it's like Reid Hoffman that's doing like some Stanford lectures like 5 to 10 years ago. It's a gold mine of insights and has like 200K views on YouTube. And I'm like, that's outrageous. It's just out there for free. And you can like listen to great founders from the YC and Valley ecosystem mostly, and how they were building up. And it's just something which, is out there, and then you can take what you like from it and try to kind of create your own style. And that forming process is, I think, what basically was going on. And in that process, right, you need to overcome some hardships, and those are also really important lessons learned. You mentioned kind of our initial setup. Unfortunately, kind of 1 year in, we had to realize that it didn't work out with my co-founder and I, and that was, of course, right, the most energy draining and the most sad thing to happen, because that's, of course, not what you want. But then there's an responsibility that you have, and shared vision that we still have, and we're able to sort it out, and we could keep plowing forward with the company. But it, of course, resetted us in the way how we thought about the leadership team. And one of the key takeaways was, okay, if that's the journey going forward now, well, then it needs to be a very complementary, also more experienced team than I am, kind of to make up for that weakness of mine, and turn it into a strength. And then the second, I think, most important question was then really, okay, what's the culture? What's the philosophy they want to build the company with? And it starts with, topics like, okay, who's driving? Is it product? Is it sales? How do you think about that? What's, how do you aspire to then build your product function, right? Is engineering a delivery feature fabric, or, is it collaboratively part of the process of figuring out the right solution? For us, it's the latter, for example, and making those decisions, and then finding the right people that can amplify this, and embrace this, and live this in their functions, while still finding this kind of common core. And for us, or for me personally, there was also then investing into culture very early on by saying, okay, what is it that we stand for? And I personally have the stance that every one of us has values, and you aren't really able to change the values of a person, and it's fine. But you can agree on a set of principles that you apply when you work together. And so, that's the path that we went down. And so I think there was, many things on that journey that are now carrying us forward. And then, the topic of hiring is one that's extremely important, also extremely difficult to get it right. And I think we're more right than wrong on it. But then, equally important part of, building and your culture is realizing when you're wrong, and that comes back to the topic of feedback, and wrong, can be both sides, right? Sometimes, it's just not the right setting, and then, realizing that, and being able to freely talk about it to help someone find their forever home, and find a place where they can reach your true potential. That goes a long way, and that's always what I strive for, because, ultimately, in this business, right, our first principle is customer first, and as a CEO and as a founder, more importantly, everyone is kind of my customer in the employment experience that we are creating. And so that's kind of the way how I try to look at it. Of course, you're never able to make all of your customers equally happy, but that should be kind of the standard that you're holding up yourself up against.
Yeah, exactly. Yeah. In order to make your customers happy, you need to have employees who are happy, because if they're not happy, then that will show to the customers, which ultimately then will impact the kind of relationship or the way that you look to them.
Yeah.
Is it has that kind of company culture you've been trying to instill changed over 5 years because of the learns, or has there always been a set amount of principles in your case?
It's a very good question. We thought about that by design, and so when you look at it, it would say guiding principles version 1.0, which implies there can be a 1.1 or 2.0, and we'll see about that. And I think going through the first phase of Lemon.markets, literally from 0 to 1, like building up the platform, getting the licenses, getting the first partners live, and now we're entering this next phase, going from 1 to 10. Bigger partners, more volume. What does that change? And there needs to be some change to our principles, because there's other things that we maybe want to emphasize, things that we want to course correct on, and then having that discussion with the team is an important pillar. And I think that's something, at least for me personally, which I'd like to look at in the second half of the year.
Yeah, exactly. Yeah. Interesting. So looking then at that brokers as a service model, which Lemon.markets is known for, you decided back in 2020 when you came up with the idea to approach this from a B2B side of things instead of a B2C, right? You could have set up another trading platform like a Bucks or a Trade Republic or a Robinhood or an eToro, but rather you said, no, I want to be an enabler, a platform of these type of companies, or companies who want to potentially offer trading as part of their offering or as a standalone product. Why did you choose to go with that approach?
Well, I think there's multiple ways to look at it. The first one was really personal, right? We wanted to build the biggest company possible, and I think doing that and being really influential is one way to achieve it if you really be a true infrastructure partner for many others. And there's so many communities out there that have so different needs. And I personally don't know how to address all of them. But there are so many great entrepreneurs and entrepreneurial people out there in these companies who have a way better grip on it. But if we can provide them the same generic set of things, which is extremely complicated, it's not easy, but like if we can focus on that and they can focus on packaging it in the right way to their customers, then that's the true kind of way of kind of how each can focus on their best expertise. And we stated it earlier, right? Everyone needs to invest. And everyone means that you need to get into everyone's context. And there are so many great products and great product companies out there that already do that. Why not help them do it better, do it more effective, do it more affordable? And so that was kind of really the key insight. And especially when you look at, we come from the technology world and fintech world, and there we always think about doing new things. But when you look at financial services, there's so much interesting, trusted brands out there that have access to the customer, and they cannot yet position themselves in a way because it's not their home turf to build, the latest technology. And if we can help them create the best user experience and stay competitive in that market, then that's an extremely high leverage that we can have to reach, our vision and reach that, ambitious goal that we set ourselves of opening 100 million securities accounts. But of course, on the other side, it's also extremely complicated because building infrastructure means, you're like a deep tech company. You have to invest a lot, and then it takes very long for customers to really become activated. And so I think knowing that, sometimes you would wish to kind of be more kind of the person that can drive your own success because there's so many dependencies that you have. But that's part of the challenge and that we need to overcome to really become truly successful.
Yeah, exactly. I think it's super interesting. You talk about the applicability in financial services, right? Financial service brands who have access to the customers and powering those. But I feel that there's also applicability of maybe non-financial service brands who have access to the customer who could offer a service such as yours.
Absolutely interesting question. And it's been something that we've been excited about since day one. It's really complicated in the regulatory framework to kind of combine this non-financial services brand that it's not their home turf to offer the services, with the rightfully strict, laws around protecting consumers, because regulation in the end is just protecting consumers. And I say just, and I don't mean to kind of make it smaller. It's a really big and important challenge because ultimately the only currency that you have in financial services is the trust that partners and customers have in you. And so you shouldn't take that currency lightly at any point throughout that journey. But it's something that you need to factor in going that way. And so that was for us kind of one of those realizations early on.
Is there companies that you work with right now or that you are excited about in terms of opportunities outside of that kind of traditional or obvious financial services segment where a Lemon.markets product could work?
We have lots of ideas. I think not everything is possible these days with the way how things are set up. There's one exciting one that we're pursuing and that we hope that kind of come through, and we'll hopefully be able to speak about that more in the second quarter of the year. But for the time being, I have to say we really focused on what we see as the most obvious opportunities, which is wealth management, banking, and then treasury, which are kind of the three core use cases. And I think that's where you would see most of us. And then together with these companies, it's trying to figure out, okay, how can you kind of combine that? And I think, one very good way how you can see that, two of these, say, fintech worlds or finance worlds coming together is, combination of payments and investing, right? Combining your card and cashback with, investing functionality. And that already is quite contextual. And you can take that a few steps further still. And I think there's just so much potential in that segment alone that we'll be very busy serving these needs. And if we're done there, which will never be, then I think, you're totally right. There's an opportunity to go broader and go non-financial in the right kind of regulatory setup.
Just to tickle you a bit further, what adjacent though, but what I saw by doing a bit of research on the likes of your website is, for example,
we hope you're enjoying this insightful deep dive. The conversation doesn't stop here, though. The full discussion is available exclusively as an audio episode on your favorite podcast streaming platforms. Don't forget to subscribe for more industry insights and be part of the conversation by leaving a comment. Thanks for joining us, and we'll see you next time.